So everything is fine now. Is it buffering? Is it buffering? Okay, just wait a second and everything now. Yes, now everything is fine now. So let's continue. Let's start with the session. So it is score 60 plus in GA session, the series that is going on. So we are going to do today the important MCQs on the RBI notification, and this is for the March 2023, where we are going to cover everything that is relevant from the March 2023. Okay, so let's start with it without wasting any time. Okay, so YouTube, do subscribe to our YouTube channel and join our Telegram channel. In the Telegram channel, you will be getting the PDF of this session. Okay, so let's start with the first question. So here, RBI in consultation with the Government of India has recently decided that the limit for the WMA, that is the Ways and Means advances for the first half of the financial year, will be what? So first of all, can you tell me that Ways and Means advances is a long-term loan that is given, or it is a short-term loan that is given by the Reserve Bank of India to the Government of India? So, okay, I'm getting the right answer. Yes, Gaurav, I am happy also that my voice is audible now. Oh, that was funny, but yeah. Yes, it is Ways and Means advances is a short-term loan, okay? And yes, the right answer is A, that is 1,50,000. So here, let us discuss a little about the Ways and Means advances, and then we will discuss that what is the current news, okay? So the Ways and Means advances are temporary advances, that is the short-term advances that is given by the Reserve Bank of India to the center and the state government. So it is not like that only the center government can get the Ways and Means advances, that is the short-term advances, but the state government can also get the short-term advances from the Reserve Bank of India. But for the state governments, there are the differently the RBI releases the limit. Okay, so for now we are discussing the limit for the center government only. So the government can avail the immediate cash, the short-term loan through the Ways and Means advances. The government can get the loan from the RBI when required. It has to return, the government has to return the money within 90 days. Okay, the limits for WMA are decided by the government and RBI mutually and revised periodically. So what is happening, that the Ways and Means advances is a short-term loan that is taken by the Government of India or the state governments from the Reserve Bank of India. Now what is the interest rate that is charged? Because if the RBI is giving the loan, so the RBI must be charging some interest also. So the RBI is charging the interest rate equal to repo rate. Who can tell me that what is the repo rate currently? So anyone that can tell me the repo rate currently? So it is 6.50%. So yes, the repo rate is 6.50%. So that is for the Ways and Means advances, the RBI is charging Government of India 6.50%. Now what is this overdraft? So what happens that if the Government of India is not able to return the money back in 90 days, if the Government of India is not able to return the money back in 90 days, or the state government is not able to return the money back in 90 days, then there is the overdraft, penal interest that is charged on the overdraft. So the government can avail the immediate cash from the RBI if required, and the 90 days, they have to return back the money in 90 days. If the WMA exceeds 90 days, it would be treated as an overdraft, and there is 2% extra interest that the Government of India has to give RBI. So the Government of India will have to give 8.50% of interest to the RBI in the overdraft case, that is 2% extra than the normal repo rate. So I hope you have got the basic idea regarding this, as well as it has been decided in consultation with Government of India that the limit for Ways and Means advances for the first half will be 1,50,000 crore. Okay, and this is the limit for the first half of the financial year 23-24. Any confusion regarding the WMA, you can write. Okay. Recently in March 2023, the RBI has launched the mission Har Payment Digital. That is, Her Payment Digital means that all the payments should be digital, and this mission was launched in the Digital Payments Awareness Week that was celebrated in March 2023. So all the notifications, press releases and everything from the RBI website today we are going to do under the March 2023 session. So here I am getting the answer D, and that is absolutely correct. So I am getting the answer from Prachi, Saurish, Tapan, Millie, all of you have given. Wayne, Bruce, Nilesh, Shivam, all of you have given the right answer. That is D. That is digital payment apnao auro ko bhi sikhao. That is, in English it is adopt digital payments and teach others also. Okay. So this is the Digital Payments Awareness Week that was celebrated in March 2023. Under this week there was the Her Payment Digital Mission that was launched, and this was the digital payment apnao auro ko bhi sikhao. That is, adopt digital payments and also teach others. This was the theme of the awareness week, as well as this was the message in the Her Payment Digital also. Now there is another question from this Digital Payment Awareness Week. See, under the Digital Payments Awareness Week there was the different launches that has happened. So the Her Payment Digital Mission was launched. Jan Bhagidari events, they were launched, as well as there was the other mission that was launched was regarding the payment system operators were to adopt dash villages, how many villages across the country, and had to convert them into digital payment enabled villages. So I'm getting the answer 75. Yes, 75 is absolutely correct. Okay. No, Wayne, all the banks had released that kind of logo. So Canara Bank, because I got this snippet, so I took it here. Otherwise, no such thing is there. Okay, that you have to remember something about the bank. No, nothing like that. So here you can see that under the DPAW 2023, the regional offices of the Reserve Bank of India conducted the awareness and outreach programs, which also formed the part of the Jan Bhagidari events that were celebrated during the G20 under the G20 theme. So under the G20 theme is what? Of promoting digital public infrastructure, that there should be the digital public infrastructure, the digital public infrastructure like the POS machines and such, through which the acceptance and the digital payments can be enhanced. Okay. The Reserve Bank of India initiated the 75 Digital Villages program, under which the payment system operators were to adopt 75 villages, and they had to convert these 75 villages into the digital payment enabled villages. So these were the other two important things that were launched during the Digital Payment Awareness Week of 2023. So next question is regarding the MOU that has been signed between two central banks. So one central bank is Reserve Bank of India, and Dash has signed an MOU to collaborate on various emerging areas of financial technology, especially the CBDC, that is the central bank digital currency. So which central bank is there that has signed this MOU with RBI? That you have to tell. So this should be very easy. I am getting the answer A. Okay. So I'm getting the answer A, and that is absolutely correct. It is Central Bank of United Arab Emirates that has signed this MOU with the RBI. Okay. So the Reserve Bank of India and the Central Bank of the United Arab Emirates that has signed a MOU in Abu Dhabi. Remember where they have signed this MOU? See, RBI is engaged, so you can say that it is in Mumbai or it is in New Delhi. No, it is in Abu Dhabi that the MOU was signed, and the MOU was signed for collaboration in the areas of fintech, financial technology. Fintech means financial technology, especially the central bank digital currencies, and especially for the exploring the interoperability between the central bank digital currency. So the central bank digital currency of India is e-rupee, and the central bank digital currency of UAE is CB, central bank digital currency of UAE. So to see that they are interoperable or not, this kind of MOU has been signed. Okay, so the CBA UAE and the RBI, they have jointly they will be jointly conducting the proof of concept. Proof of concept means that they will be seeing that the interoperability is possible or not. So they are trying to see that this idea can be realistic or not. That this idea is realistic or not. So that is under the proof of concept. So this will be seeing that the interoperability is possible or not, and the bilateral CBDC bridge will be facilitated if the idea has will become realistic then. So I hope you have understood the basic idea. Now coming to the next question, that is regarding the Greenfield Data Center and the Enterprise Computing and Cybersecurity Training Institute. So Shaktikanta Das, who is the governor of the RBI, has laid the foundation stone for the establishment of these institutions. You have to tell that where this foundation stone has been laid down. So I'm getting the answer E, and that is absolutely correct. It is Bhubaneswar, Odisha, in which the foundation stone has been laid down. So it is the new data center will be established. And see, data center, RBI, Reserve Bank of India, is the one that has the data of all the banking institutions, of the NBFCs, all India financial institutions, credit information companies. So all of them are under the regulation of RBI. So there is too much data with the RBI. So there is the need for the data center, and there is also the need of cyber security, because when the RBI is sitting on the pile of data that can lead to great harm if it is released in the public. So that's why the cyber security is very much needed, okay, for the RBI. And that's why there is the Enterprise Computing and Cyber Security Training Institute that has been established. That is the foundation stone has been laid down. So next is, recently the Reserve Bank released its public web publication entitled Quarterly Basic Statistical Returns, the Outstanding Credit. So you have to tell that the bank credit growth stood at what percentage in December 2022? Okay, I'm getting the answer B, and that is absolutely correct. Here, see, I will tell you that which data you have to remember, which data you do not have to remember. See, for December 2022, that is for the October, November, December. This is quarter 3 of 2022-23. For this quarter, the data was released in March ending. That means for the fourth quarter, that is January, Feb, March, the data will be released around April, May, June ending. So it can happen. So for now, you have to remember this data that is present, because maybe in June the new data will come, or maybe after examination the new data will come. So we do not know that. So for now, you need to remember some important data points from here, that the bank credit growth stood at 16.8% for the quarter 3 of 2022, as against 8.1% that was in quarter 3 of 2021. Okay. Now personal loans, no need. Growth, this is also not needed. Now coming to the share of female borrowers. Now you can use this data point in the descriptive answer writing. The share of female borrowers in total credit to individuals stood at 22.7% in December in quarter 3. So you can say that, okay, the female contribution in the financial sector is becoming good, stating this data point. Or there is still much need of the steps that should be taken by the banks and the banking institutions and the monetary authorities to increase this percentage. So you can take any stance, but this data point you can use in your descriptive answer writing. So the private sector banks continue to outpace their public sector counterparts. So this also you can use. Okay. So this is the 3 data points that you should be careful about, that you can use in the examination in the descriptive answer writing, or directly from this, especially the first point, the question can come in the examination. Okay. So now coming to the quarterly statics for the deposits. Now here we have seen the outstanding credit one. Now coming to the quarterly statics for the deposits and the credit. For the quarter 3, the data released in February. That means for the quarter 4, the data will be released around the quarter 4 ending March 2022. The data will be released around May, June. In June starting, May end, or June starting. So these data points you do not have to remember, because soon you are going to get the new quarterly statistics for the quarter 4. Okay, but here I will again tell you that at least remember the important points. The bank credit growth stood at 16.8% in quarter 3, and the aggregate deposits increased by 10.3% for the quarter 3, and that is led by the term deposits, because the saving and the current deposits, they are moderating in growth. So their growth is actually, see, for the current deposits the growth is only 4.6%. For the saving deposit the growth is only 7.3%. For the term deposits the growth is 13.2%. That is quite high. So that is, in the economy there is the term deposits, that is fixed deposits, and recurring deposits, that is increasing. Okay, this is all that you need to remember from here. Now coming to the next question. I hope you will be easily able to answer this question. By the end of the session, I will show you some analysis points also that will be very important for you for the examination point of view. So I will show you that which reports you have to do and which reports you do not have to do. Okay. So now coming to draft guidelines on minimum capital requirements for market risk. Now the guidelines shall come into effect from which date, this you have to tell. So here I am getting the answer C. Some are saying C, some are saying A. So what should be the right answer? Here the right answer is C actually. It is April 1st, 2024. Okay, be very careful with dates. So you have to remember that from when it is going to be effective from. So these draft guidelines were released for the capital requirements, okay. So it is applicable to all the commercial banks excluding the local area banks, payment banks, regional rural banks, small finance banks. It is also not applicable to the cooperative banks, okay. So now coming to the next question, I hope you will be easily able to answer this question, okay. It is a very important question that, see, this is the crux of the whole notification. If you are able to answer this question, that means you have understood the complete notification, and only such kind of question, like nothing out can come from this now. So now try to answer this question. Tukka maro, like try to give the right answer of this question if you are able to. See, in the examination you have to see that how many tricks you can apply in answering the question, okay, how you can answer the question. So here I am getting the answer A and C, and that is absolutely yes, correct. So D is the right answer. The capital requirement for both specific risk and general market risk will be 9% each of the core capital. The new norms draw a boundary between the banking book and trading book. That is correct. The difference has been drawn between the banking book and the trading book. The new guidelines ban short position on any instrument except in derivatives and central government securities. So now let's understand this. So here the key highlights are, see, bank take deposit, and with this money the bank is giving the loans, as well as the bank is also investing in some securities. The bank is making the investment in shares, stocks, bonds, as well as the bank is also investing in derivatives and such kind of things, okay. So the loans are shown in the banking book because this is the main activity of the bank. The major activity of the bank is to take deposit and give loan. So under the banking book the loans come. Under the trading book, the investment come, because investment is what? Shares, stocks. This is the trading that is happening in the market. So this is the trade, investments come under the trading book. So now with the loans, there is some credit risk, because loan is what? It is a credit. So there is some risk that is present. In the investments that is present in the market, there is the market risk. There is the market risk. Okay. So banking book, you can understand that the new norms clearly draw a boundary between the banking book and the trading book. The list is given of the instruments that can be included in the trading book that has the market risk. So whatever is present in the trading book, that is the investment, they will have some market risk attached. The banking book, the instruments in the banking book like the loans, they will have the credit risk attached, okay. And against this credit risk, the banks will have to maintain the capital requirement. The banks will have to maintain some capital. Against the market risk, the banks will have to maintain the capital. So capital requirement for both specific risk. Specific risk means the risk regarding one security or each security, short, long position, whatever position you have that security for. So each security, let it be one share, let it be one stock, let it be one bond. So each security has some specific risk, as well as it has the general market risk. What if the general market is going down? Okay, so that should be for the capital requirement for specific risk in the market and the general market risk also. There should be 9% each the capital that should be kept, that is of the core capital of the bank, okay. That is the liquid capital of the bank. Now, market risk is the risk of losses on the financial investment. I have told you that the market risk is the risk that is in the market, that is associated with the investments that you are doing in the market, like the stocks, shares, etc. Credit risk is the possibility of a loss resulting. Credit risk means that if the borrower is not paying back, if the loan is not coming back, okay. Short position I have already told you in the previous session where I have discussed with you this question. You can read that. Short position means that sale of a stock you do not own. So you do not have that stock, still you are selling that stock. Investors who sell short believe that the price of the stock will decrease the value. So today, let's say, today you are selling the stock that you do not have. So for rupees 100, you are selling 10. Someone is the buyer has agreed to buy it. So today is the trade that is happening. But the settlement will happen tomorrow. The settlement will happen tomorrow. Okay. So this kind of short position, this is the intraday trading that you have to do. Okay, this is only allowed in intraday trading. Intraday trading. So selling, you are selling the stocks that you do not have, and you are selling, let's say 10 for rupees 100. You know that the price is going down, and let's say on the same day the price of the stock goes down to rupees 80. Now you will buy the stocks at rupees 80. You will buy 10 stocks for rupees 80. So that is, you will be selling at 1000, but you are buying at 800. So you are making the profit of 200. Now the settlement will happen tomorrow. So you have bought the shares today so that you can settle the trade tomorrow. So you are not you are following the trade. Okay, so you are doing the trade today. You are settling the you are making the contract today, but you have to do the settlement tomorrow. So today only you will buy the shares when the price. I have told you, in the banking book there are the loans, and in the trading book there are the financial instruments, that is the investment. Now coming to the next question. So many of you are getting the confusion here. See, it is written the new guidelines allow, but the new guidelines ban the short position on any instrument that is not derivatives or central government securities. So the new guidelines allow the short positions only for the derivatives and central government securities. So short position can only happen in the derivatives and the central government securities. So that is, new guidelines ban the short position on any instrument except in derivatives and central government securities. Okay. No problem. I hope you have understood it. Now coming to the next question. Recently RBI announced the rate of interest on Government of India floating rate bond. So you have to tell the interest rate. Okay, I am getting the answer 8.51%. That is absolutely correct. Okay. So here this was in the news, and that's why we have brought for you this, because if the notification is also in news, it becomes more important. So the rate of interest on the Government of India floating rate bond. So first of all, floating rate bond are the securities that do not have a fixed coupon rate. That's why they are called floating. Coupon rate is the interest, you can say interest rate. Okay, they have a variable coupon rate, they have a variable interest rate that is usually determined at a pre-announced intervals. So here, for the 6 months, for the half year, that is for the 6 months, this interest rate has been announced and it will be changed in the next 6 months. So that's why the interest rate is variable and it is determined at a pre-announced interval. The FRB bonds carry a coupon with a base rate that is equal to a weighted. So how the coupon rate or how the interest is being determined, it is determined on the basis of the base rate that is equal to the weighted average yield of the last 3 auctions that has happened of the 182-day treasury bill. Okay, so the base rate is equal to the weighted average yield of the last 3 auctions that has happened of the 182-day treasury bill plus some spread, that is fixed spread decided by the way of auction. So here you can see that the FRB 2033 carries a coupon which has a base rate that is equal to the weighted average yield of the last 3 auctions of 182-day T-bills plus a fixed spread of 1.22%. Okay. So now let's revise. I hope you have understood all the previous ones and you have given the right answer of all the previous ones. Now we are going to test the knowledge that we have already studied now. Okay. So coming to the first, answer very fast, that WMA has to be returned within how many days? So the right answer will be how many days? So it will be 90 days. Okay. So the right answer here is 90 days. Next question. Fast. Try to give the right answer of all the 3. MOU between the RBI and SEBI UAE for emerging areas of fintech has happened. Specially the focus is on what? Cross border. Yes. The CBDCs, especially the interoperability between the CBDCs of both the countries. Aggregate deposit, yes, I am getting the right answer, 10.3. It is aggregate deposits increased by 10.3%. Okay. Floating rate bond features, you have to tell the most important feature of the floating rate bond. So it has a variable coupon rate which is reset at pre-announced intervals. Okay. So now coming to the next question, try to read this question calmly and I will give you 1 minute. Try to read this question and answer this question very fast. Okay. Now give me a thumbs up if you are liking the session. Try to give me a thumbs up if you are liking the session, or if you want me to slow down my speed or anything, try to write that in the chat box. Sneha, yes. So FRB 2028 and the FRB 2034 and the other FRBs were released in April, that we have covered in the previous session. So we have already covered it in the previous session because the previous session was for the April 2023. But in March 2023, only the FRB of 2033 was launched. Okay, so we are discussing that FRB only. Okay, give me a thumbs up also fast. So here I am getting the right answer. So RBI notified regarding the instructions for revised regulatory framework for the urban cooperative banks, so net worth and capital adequacy. As per the framework, you have to tell that which of the following is the incorrect statement. Okay, so the first statement is correct because the minimum net worth has to be complete. 100% of the minimum net worth has to be achieved by March 31st, 2028. Tier 1 UCBs that is operating in the single district shall have a minimum net worth of rupees 2 crore. Okay, so this is wrong. Tier 1 UCBs shall maintain minimum CRAR of 9%. So this is correct. So here the change has happened in the instructions. They were to come into effect from April 1st, but they have come into effect from March 31st. UCBs shall maintain minimum net worth. That is, net worth is total assets minus liabilities. That is the actual value of the urban cooperative banks. So minimum net worth or minimum value of the urban cooperative banks for the tier 1 UCBs that are present in only one district, that are present in only one place, they should have the minimum net worth of rupees 2 crore. But all other UCBs, that are the tier 1 UCBs that are present in more districts, or tier 2 UCBs, tier 3 UCBs, tier 4 UCBs, they should have the minimum net worth of rupees 5 crore. So only Suhash has given the thumbs up. No one else is understanding the session. Is it so? Give me more thumbs up if you people are understanding the session. I will also be able to know that my pace is right or not. So there are 4 tiers. I hope you have understood that the tier 1 UCBs that are present in only one district, only a single district, they have to keep the minimum net worth of 2 crore. Tier 1 UCBs that are present in more, like, they are not the unit UCBs. Unit UCBs are present in only one area, in one district. So tier 1 UCBs other than that are present in more than one districts, so they have to maintain 5 crore of the minimum net worth. Now tell me that what minimum net worth the T4 UCBs have to keep. What minimum net worth tier 4 UCBs have to keep? Tell me this answer fast. Thank you, Sagar. Thank you so much. Thank you, everyone. Okay, that's good to see. All the thumbs up. So tell me, tier 4 UCBs have to keep how much of the net worth? So it is, the right answer will be 5 crore. Tier 1 UCB that have presence in more than single district, tier 2 UCBs, tier 3 UCBs, tier 4 UCBs, they have to keep the minimum net worth of 5 crore. Okay. So tiers like UCBs are divided into 4 tiers on the basis of deposit size. So the UCBs are divided into different tiers on the basis of deposit size. So here you can see the deposit size. It is also very important from the examination point of view. Okay. So now coming back to the question. So UCBs which currently do not meet the minimum net worth requirement. So if a tier 1 UCB that is working in a single district does not have the minimum net worth of 2 crore, or if the tier 2 or tier 3 or the tier 4 UCB or the tier 1 UCB that is present in more than a single district, if they do not have the 5 crore of the minimum net worth, they have been presented with a phased path in a systematic manner. They can achieve this minimum net worth. So 50% of 2 crore, that is 1 crore, 50% of 5 crore, that is 2.5 crore, they have to achieve by March 31st 2026, and 100% of the minimum net worth they have to achieve by March 31st 2028. Now coming to the CRAR question. Try to give the right answer of this one. So as per the revised guidelines of Reserve Bank of India, tier 2 to tier 4 urban cooperative banks shall maintain a minimum CRAR of what? Okay, so it is saying tier 2 to tier 4. Some are saying 9, some are saying 12. It is actually 12%. Okay. So the right answer is 12%. So see, the tier 1 UCBs, as per the new revised guidelines, the tier 1 UCBs have to be maintaining CRAR of 9%. See, I hope all of you know CRAR. It is the capital adequacy ratio. That is, assets of the bank is loan. The bank is giving the loan on which it is earning interest. So this is the asset of the bank. Now, assets of the banks have some risk attached. Okay, assets of the banks have risk attached because the loan has some risk attached. If the government of India, the loan is given to government of India, there is 0% risk. But if the loan is given to corporate, then there is 10% risk. If the loan is given to MSME, there is some other percent of risk. So there are risk weighted assets. So the loans are seen that, okay, what risk is attached with these loans and risk weighted assets. So let's say there are 100 crore of the risk weighted asset of bank A. Now against this 100 crore of the risk weighted asset, the bank has to keep the capital, the eligible capital, or the bank has to keep some capital. Let's say it is 1 lakh. Okay, so that is the capital adequacy ratio, eligible total capital upon risk weighted asset. So if the bank has to keep, let me take a easier example. The 100 rupees is the total risk weighted asset, total risk weighted loans that the bank is giving, out of which the bank is keeping rupees 12. Okay, as the total capital. So the bank is keeping rupees 12 with itself as the capital that the bank can use in the distress kind of situation. If some loan is not coming back, maybe the MSME is not returning back the loan, or the farmer is not returning back the loan, so this capital will help in the distress situation. So CRAR here is 12%. Okay, so the tier 1 UCBs have to be maintaining a minimum CRAR of 9%, and the tier 2 to 4 UCBs have to maintain a minimum CRAR of 12% of the risk weighted assets on the ongoing basis, that continuously they have to keep maintaining this 12% or 9%. So the source of this is RBI website, or if you have taken the course from EduTap, so it is RBI News Tab. Okay, so the UCBs, see, before all the UCBs, when there were only 2 tiers of the UCBs, they had to maintain 9% of the CRAR. But as per the revised guidelines, tier 2 to 4 UCBs, now the UCBs are divided into 4 layers, and now tier 2 to 4 UCBs, they have to be maintaining the CRAR of 12%. So the tier 2 to tier 4 UCBs, from 9% they have to go to 12%. So they have been given some time. So 10% they have to maintain by 2024, 11% by March 31st 2025, and 12% by March 31st 2026. So you have to remember this data very clearly. Okay, now coming to next question, that is, recently in March 2023 601st meeting of the Central Board of Directors happened. Who is the chairman? That's it. That's what that you have to answer. So who is the chairman here? Shaktikanta Das is the one that is the chairman of this Central Board of Directors meeting of RBI. Okay, so easy, very easy it is. Now coming to the next, see India's international investment position. This was released in March 31st for the quarter 3 that was ending in 2022. So net claims of non-residents on India declined by this much. So this is the important data point that you have to remember, and this you can read. Okay, just net claims of non-residents on India declined. This means that now the non-residents, there is the decline of the claim that has been made by the non-residents. Okay, so that is very good for the country because this much we will not have to pay. Okay, so the net claims, let's say the government of India was taking loan from the US government. So the US government, that is the foreign government, or the government of India was taking loan from the foreigners. So the non-residents had claimed interest on this loan. But now the government of India has paid back the loan, so that's why there is less claim of the foreigners. So that's why the net claims of non-residents on India has declined. Similarly, there can be other, like some business has taken loan from the non-residents, and so the business had to pay this interest. But now the net claims has decreased because less interest has to be given, or other kind of claims less has to be given. Okay, that's why this is a good news for the country, and this data point you can remember. Otherwise in this there is, just go through it, nothing else that is very important from this. Reserve assets accounted for 64.3% of India's international financial assets. So from the total international financial assets of ours, 64.3% is actually the reserve assets of the Reserve Bank of India. That's it. So now coming to the next question. See, the minimum times MPC meet in a year is 4 times. But in this year, the MPC is going to meet 6 times. So at least they have to meet 4 times, and in this year they are going to meet 6 times. So India's current account deficit declined to dash of GDP in quarter 3 from 3.7% of GDP. So you have to tell that in the quarter third, the current account deficit has declined. That is, current account deficit is what? Let's say the imports are happening more than exports. So there is some current account deficit. But it is saying that the current account deficit is present, but it has declined. So that is good, that the imports are greater than exports, but there is some decline in the, either imports has declined or exports has increased, and that's why the current account deficit has declined by 2.2% of the GDP. So here you can see that the India's, so this is the balance of payment data that is present for the quarter 3. This was released in March. So India's current account deficit declined to 2. Do not remember the values, remember the percentages. India's current account deficit declined to 2.2% of GDP. Okay, as well as this, why the current account deficit has declined. Deficit means that there is the, we are making more payments and we are receiving less payments. Okay, so that is bad. We are making more payments and the receipts are less. Payments are more, receipts are less. So that is the meaning of deficit, but the deficit is declining. So that is good. This is because of the narrowing of merchandise trade deficit. That is the goods import and the goods export. So the deficit, so the goods export is greater than good import was happening. We were importing more goods, we were exporting less goods. But the difference between the import of the goods and the export of the goods is reducing. So that is good for the country. Robust services. So the services sector is doing very good, as well as the private transfer receipts are happening more. So we are getting more remittances from the other countries. We are getting more inward remittances. Okay. Services exports has reported a growth of 24.5% on the year-on-year basis. Net services receipts increased. Net foreign direct investment has decreased. So FDI, I have already told you that there is much problem that is coming with the foreign direct investment. So the foreign direct investment is decreasing. Why? Because of the volatility that is in the other countries, the recessionary kind of mindset and the tendency that is coming in other countries. So they are afraid to invest in other countries. Okay, so they are trying to save their money. They are not very much so they have the negative mindset, pessimistic mindset now. So that's why the FDI, foreign direct investment, is decreasing, because in the foreign countries they are trying to engage less in such kind of activities. Okay, foreign portfolio investment. So net portfolio investment recorded inflows. So that is good, that at least in the portfolio investment there is the inflows that is coming in. Okay. So now India recorded a current account. So we have discussed for the Q3, that is October to December, but there is the half yearly data that has also been released. So you have to tell that regarding the half yearly data, the current account deficit was what? Was what percentage? So this you have to tell. So the right answer here is 2.7%. Okay. So India recorded a current account deficit of 2.7% during the during the half yearly. Okay, during the April to December 2022, as compared with the deficit of 1.1% during April to December 2021. So during April-December 2022, there was a depletion of the US dollar 14.7 billion of the foreign exchange reserves, because the RBI had to use the dollars, supply the dollars. So the dollar was becoming stronger, the dollar was appreciating, the value of the dollar was increasing, and the value of rupees was decreasing. The rupees was depreciating. So in this case, the RBI had to supply the dollars, so that when the supply increases, the value start decreasing. So that's why the rupees should not decrease in value by much. So for that, there was the depletion, there was the reduction of the foreign exchange reserves that was done, because the dollars had to be supplied in the market to stop the dollar increase by such a high rate. Okay. So now, which of the following commercial banks were recently excluded from the second schedule of the Reserve Bank of India Act 1934? So this you have to answer. So very easy it is. So it was Abu Dhabi Commercial Bank, PJSC. So this was the bank that has been excluded from the second schedule of the Reserve Bank of India Act 1934. Okay. So now coming to this, try to give the right answer of this in a fast manner. UCB Tier 1 CRAR. UCB Tier 1 CRAR is what, as per the revised guidelines? So it is actually 9%. Okay, it is 9%. If we talk about Tier 2 UCB CRAR, so what is that percentage? So what will be that percentage? So it will be 12%. Okay. Now UCB Tier 2 net worth. So what is the net worth of the Urban Cooperative Bank for the Tier 2? So the Tier 2 net worth will be 5 crore. And FDI inflows, is it increasing or decreasing in the country? So what you have to tell? So it is increasing or decreasing? It is actually lower. Okay. During April to December 2022, depletion of the foreign exchange reserves has happened by what amount? So US dollar, by what amount? It is by 14.7 billion. So by this much, the foreign exchange reserves has depleted in this period. So you can substantiate it that the RBI was taking the steps so that the depreciation of rupee can decrease. Okay. So here now I have told you that I will be telling you some key points that you can remember, and through this your preparation can become a little easier, because most of the students say that okay, inflation, we have to do the surveys. So which survey should we do? So should you do the April survey? So see, the Feb the survey was released. After that, after 1 month, April, the survey was released. So the inflation expectation survey is actually a bi-monthly survey. So it will be released in June now. So June data you should read, and you should remember that data point. If you want to read this survey, read the June edition, because that will be near to the examination of July. If the June edition is not released, then read the April one. But wait till at least 10th June, wait for the surveys to be released. Understanding the point? Now similarly for the consumer confidence survey, it was released in Feb, then in April, now it will be released in June. So why don't you wait for the June edition, so that you do not have to remember the April data also, then June data also. So remember only the June data. And these are the bi-monthly surveys. Okay. Understanding the point? So now financial stability report. So now you will be confused that which report to study, because the financial stability report can be released in June also, can be released by the end of July also. So I will suggest you this, that wait till 10th June or wait till 15th June for this FSR report. And if it is released by then, you can read that. Otherwise, follow this December report. Okay. Yes, follow the December FSR report. You can read the highlights. Just read the highlights that has been given in the RBI notification. Do not go through the complete document for now. Just read the highlights. Just have the basic idea. And then if the report is not released by 10th or 15th June, then you can read this FSR report of December 2022. Because you can see that it was released in July. It was okay. I'm telling you that only Wayne, that FSR might come in June or July. So if it comes in June, the new edition you have to do. Otherwise, the older edition you will be doing. Okay, you should be doing. Coming to annual report. So annual report was released in May last year. So it is expected that it will be released by the end of the May this year also. So the new edition only you should do. In the case of annual report, only do the new edition. By the first week of June, you will be able to get the new edition of the annual report. So you can do it this. So now coming to the report on trend and progress of banking in India. This was released in December 2022. Now this will be released in December 2023. So surely you should be able to do this December 2022 one. So for this report on trend and progress of banking in India, you do not have to wait. For this report, you should be going forward with this. You do not have to wait. So you can read this report. The annual report, wait for that. The FSR report, you can wait for that. You can read the previous edition also. For the surveys, wait for that. Okay. So now coming to the data like that. Many of you must be confused. See, when it comes to the deposit, the data regarding that and the data regarding the credit, do that. Okay. Do the quarterly data. But when it comes to the private corporate business and data regarding that, in this just you have to understand that, okay, the manufacturing companies, lower sales. Information technology companies, higher growth. Revenue growth for non-IT service companies, steady performance in trade. So this much. You do not have to remember the data here. Just have the basic idea that what is happening in the economy, what is happening for the companies. Okay, that much is enough. So this is the homework question from my end. LRS we have discussed a lot. So we have discussed liberalized remittance schemes in a lot of sessions. So try to give the right answer of this question. This is the homework question. Okay. So thank you very much. This was all for today. And we have completed all the important notifications from the March 2023. So these were the important notifications and the relevant notifications from the exams point of view. So that's all for today. I hope you have understood everything very clearly, and if there is any confusion, you can write in the comment section below. Okay. So thank you very much. If you have any query, you can mail us here or you can contact us through this number. Okay.